afternoon yesterday. And what it did is it broke through a 61.8% line of a long from lows. And the reason that that is significant is because the dollar strength trade has potentially confirmed itself again. Why that is important is because the dollar strength trade, as we know, we are in currently a negative correlation right now with the NASDAQ and the ES. That negative correlation can drag the indices down. But you'll notice over the 15-day time frame that there's also a negative correlation that's coming out inside of the Dow and the Russell. And 2 Fridays ago, we were having the discussion about the flights to quality and the flights to the small caps. And it's pretty obvious to everyone involved in the markets and that pays attention to them that the air was coming out of the AI narrative, the Mag 7, this circular financing that had been going on in this 1,500 point rally that everyone got so excited about has actually started to roll over, not only in the amount of money that is being allocated towards it by Wall Street, but also in terms of just the realization that the companies that are token maxing, that are allocating funds to these companies aren't seeing the revenue increasing that they had expected. And so there's this huge kind of Wile E. Coyote moment from the perspective of, oh wait, okay, we've over allocated to this sector. And so they rebalance into the small caps and quality, the Dow. Well, the Dow and the Russell broke through their series of long setups. Not only did that happen, but we also had an environment where yesterday we had a 10% rally inside of crude oil. And I know that the crude or the CPI prints came back lower than expected. The CPI prints were great, good for Warsh. He has a lot less pressure on him than as far as raising interest rates. He has a lot less pressure on him from probably the White House. But the reality is that the markets don't trade one print, and they don't trade on vibes. They don't trade on feelings. They trade on prices. And what happened to prices yesterday was that crude oil had a 10% spike, and it changed everything. It changed everything. We came off the edge of this deflationary boom quadrant, and we are now on our way into a deflationary bust. And this is another great test here of our little regime tracker here. And every time we come into one of these moments, I'm always really excited to see what happens, because I've only been tracking this since late January in this form. In your eyes, since say late March, early April is when I first showed it to you all. And what happens at the edges of these quadrants is that when you get in terms of when we were going into late February, we were in deflationary boom. We came off the edge and we had a sell off in mid-February into that crash until late March, early April, our April 1st lows. And it was at that edge of the quadrant where we came off that edge on a Thursday, and we had a 1-tick front run of a long setup, and we rallied 1,500 points. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.